Hey, Brian here from quantlabs.net. Just wanted to introduce you to our really more advanced stream that's part of the quantlabs.net school academy. This is really pure calculations, pure equations. There's no source code that comes with this, but one of the powerful things of these this course was purposely meant for MATLAB. Can be kind of used for R as well. I wouldn't, I don't know, it's up to you, but it's really meant for MATLAB. I'll show you what I mean when I present a typical unit. So basically we have two courses that are available. The first one is on, these are specifically meant for high frequency trading. These are, as I said, are fairly advanced. So we have a quant algorithm course, which includes paired trading, arbitrage, and auto regression, or regressive. And the other course is on specifically back testing, what I call measurement. You'll see what I mean when I say that, measurement. Just to give you a back story on how these courses came about, what I've done is I've looked at a very popular manual book on high frequency trading, and it had a couple hundred algorithms in that, like actual equations and scientific notation. And what I've done is I've put them into a text and a latex representation of those equations. So these can be used for something like a Simulink. If you see my MATLAB stream video, it's me going on about for half an hour on MATLAB and Simulink and all that. And typically I'm going to show you these two courses. Again, the pricing on these are very affordable. I have you can go independently with each other, or to meet your specific needs, or you can get them both at a discounted price when you decide to join. So let me just show you what we got. So the algorithm, or the courses, are divided into modules, as well as each module has a unit. So in this case, the quant algorithm course, including pair trading, arbitrage, and auto regressive, has these modules, obviously, on arbitrage, pair trading, and auto regressive. And I'm also including various other miscellaneous quantity kind of equations and whatnot. The second course has three modules. Yeah, three modules divided up into one for backtesting, measurement, and more simpler algos for those from a higher level. So let me just show you what each course would typically represent. Essentially what you get is each unit would have, as I said, the unit, or the equation in scientific notation, as well as the latex version of it as well. So you get a plain text and then the actual scientific notation of that. Now, you get a video with it explaining, or trying to explain these equations, what they mean. As I said, I'm not a formal math tutor or teacher, so I do my best to explain these. But what can I do, right? As well as once you finish the unit, you go mark as completed, and you go on to your next unit. So let me show you. Let me just do a refresh here. Alrighty. Okay, so essentially what we just did was I marked that as completed. You get a little check mark to show your progress, and then you get access to the next unit. And that's typically how it works. Now, as I showed you in this calculation, there is the plain text version, and there's a reason for that. And this has been designed purposely for this. Now, if you use MATLAB, there is a technique where you can take this algorithm, convert it easily into scientific notation, and then from there you can convert that equation into MATLAB M script using a technique that I found that can be done in MATLAB. So essentially what I'm saying is you can take this algorithm or equation and be able to drop it into MATLAB and get a working copy of it within MATLAB. There's two things you can do with that. Obviously you can create whatever you want to do with that algorithm in a MATLAB M script, or if you want to use Simulink, you can take the same algorithm and put it into Stateflow and build a custom M function using that generated MATLAB M code on that technique I just mentioned, and be able to easily build a model around that this algorithm using both Stateflow and the MATLAB Simulink. From there, you can hopefully, this is all conceptual, but you should be able to easily generate C code from all of that. That would also include within your Simulink some kind of data capture and raising events and state transitioning and all that stuff. That's what I'm hoping to do, and that's what we're trying to achieve here with these two specific courses on these quant algorithms. That was the whole purpose of it, but we'll see how it plays out. So as I said, yeah, that's pretty well it for each unit and how it's presented. Okay, yeah. So let's go over each topic and let you figure out if this is good for you or not. Okay, so we got event arbitrage, point forecast using corporate news, all four forex trading, using market neutral arbitrage using CAPM, statistical arbitrage in a high frequency trading environment using mathematical foundations, uncover interest parity arbitrage and liquidity arbitrage. Again, this is all arbitrage. Now we move into the paired trading module, co-integration around based on market efficiency, co-integration using Engel and Granger and error correction model. Then we get into auto-regressive, which is basically this representation using the estimating model and auto-correlation with a t-ratio and Lyon box test. One thing I forgot to mention here before we move into this. Remember I mentioned this is a scientific notation. Well, with the scientific notation, the other advantages, I forgot to mention this, is that this is a typical representation or notation you'll find in a lot of research papers. So essentially, as I said, you can build this notation visually in a MATLAB toolbox and be able to convert it into this, and then from there you can convert that into your MATLAB workspace, and again plug it into Simulink or whatever you want to do with it. So that is a really powerful advantage, I think, and I've done that. And you can also do this on an application on your iPad. There's a special application that does that. Alright, so going back to where we were, so we've talked about autoregressive. Now we get into this miscellaneous quant stuff, just excess stuff that I can classify into separate modules, so they're all getting dumped into one module. We got Brownian motion, non-parametric estimation, orders used in microstructure trading using this illiquid ratio, probability of observing K arrivals, random walk theory for market inefficiency, so that's testing for market inefficiency, calculating your tech data with a bid and ask spread, core portfolio optimization framework, and this is alone worth it. There's a lot of videos and algorithms and equations I have for volatility modeling. Alright, so on the next course we got a quant algorithm course with the back testing and measurement. I'll explain, as I said, in measurement in a minute. So you want to do some back testing with this evaluating point forecasts. Now, there's, let me just do the third module here in this one course before I get into the measurement, because this is kind of important that you won't see elsewhere. The simpler algos are just basically, simple things like simple returns, log returns, average returns. For options, learning about skewness, kurtosis, volatility, variance of log and simple returns. Now, kurtosis is no different than doing fat tail analysis when you listen to a lot of market analysts. And then we go on about periodic or simple rate of return. That's all the simple stuff. So going back to the measurement, this actually is outside of trading. This is good for risk management, portfolio optimization, testing performance of your strategies, and that sort of thing. So you could have a system that will choose what's the best strategy to use, so that you can tighten up your market aggressiveness. So if you have an army of strategies available, you can use various algorithms to calculate that. You want to measure maybe market impact costs, calculate your maximum number of intraday Sharpe ratio. And this is more for derivative, obviously, measuring credit and counterparty risk, measuring market risk with risk management, information-based impact, performance attribution, benchmarking basically, profitability and limit orders, transaction cost on portfolio optimization, and Sharpe ratio. So pretty powerful stuff, and that's what you get with both courses. Again, if all affordable, you can build very powerful systems with these algorithms. Very powerful and very advanced. Specifically, again, geared towards obviously using quantitative financial principles for high-frequency trading purposes. Hopefully, these help you out. If you have any questions, let me know. Talk to you later.